Good morning, to John Piper with the weekend video clip, and it's Saturday the 30th of November. Looking here at the weekly chart of the Dow again, looking at this for a while now. Major trend line here, which the Dow is challenging at the moment. As I said in the Wednesday clip, I think there's a fair case we're going to see a bit higher action, but it's been fairly fast in some markets. I mean, it's FTSE which is really lagging right now. The DAX, Nasdaq, Dow are all doing fairly well. There's probably a very good reason why FTSE is lagging. If anybody would like to suggest what it might be, I'd be interested to hear. But FTSE is doing virtually nothing, whereas the other markets are powering ahead, really. DAX is now stalling around 16,000, unsurprisingly. And I have no change of opinion here. I think we're going to go up into the Christmas period. We have 3 more weeks really till Christmas. The December expiry will be on the 20th of December, according to my calculations. Which means that, in fact, the expiry will be right before Christmas, so it could be quite an interesting period. Then we've got the New Year, which is another key area for market action, where psychology can peak, bringing in the sort of hangover in the New Year. Certainly on the Dow, that looks like a fairly reasonable scenario. Have a quick look at the shorter term action. Okay, this is the low we saw in October. Looks like a 1 there, maybe a 2, 3. 4, then we've got a 1, 2, then a 1, 2, 3, 4, 5. There are some third wave characteristics here, but I think at the moment I'd count this as a fifth wave of some sort, completing 3, and then another 4 due, and then another 5. That could take us into the Christmas New Year period. But I think overall we're going to see higher prices, but it could easily be some kind of peaking process. So look at the Nasdaq. This is a weekly chart, taking us back to the peak in 2000. Very impulsive decline. We've got this A, B, now a strong C, with a bit of acceleration coming in now. So above the Fibonacci 61.8% level. We look at the form of the latest rally. There's a 5 wave up there. Then there's looks like maybe a wave 1 there, 2, and 5 waves up, 3. This could be some kind of 5th wave, although it's again a bit of a blow off, but does count fairly well. Although the only problem with the count is that we've still got quite a lot more to come if this is the way it goes, because this is I'd say that's 1. This is 1 of 3, and then that's 3 of 3, but rather truncated, so it's not hugely. But anyway. And then we've got this blow off here. So the Nasdaq looks a lot more positive than the Dow does. I mean, the Dow's right on that strong resistance. So let's have a look at the DAX now. We focus on the rally since September. The 1, 2, 3. So again, there's a case for a bit of downside and a 5th wave coming in. Although the time scale is longer here. But again, the DAX looks very positive. Now I've turned since the beginning of November, whereas other markets are going up, which has been going down. Look at the so it still failed to take out the peak we saw in June. That's still an impulsive 5 waves down. I mean, overall there is still a positive counter. That's a 1, A, B, C, 2, 1 and 2. We're seeing relative weakness in FTSE for whatever reason. It has excuses to rally, but it doesn't seem to want to do so. But even so, we're still coming to that period now, the last 3 weeks into Christmas, where you'd think some life would come back into it, but it has been very dismal at the moment. Right, on to gold. No change here, it just looks dismal. There's still that case for a C wave rally, A, B, C, A, B, C. This may not be over there, there's no evidence over it all really, so there's still a case for a C wave, but where it is, I don't know. Quick look at the pound. Okay, it's an interesting chart. This shows the big triangle I've been talking about for some time. We connect these 2 lines here. Then we can see that the pound's actually blipped up above the higher trend line here. I mean, it could be that pound strength accounts for the weakness in FTSE, as in that a lot of these stocks. I mean, you now can buy the same stocks on other markets in effect because they're all international indices, and as such, if the pound is stronger, then the relative attraction of buying through FTSE reduces, whereas you buy the Dow or DAX, the currency is a bit cheaper in effect. So that could be why we're seeing the FTSE languish a bit at the moment. Let me know if you think that theory makes sense. Anyway, the pound is now above here. This could be this does suggest maybe this was a false breakout, quite a big one, but it was. We're actually going to go higher here. We've got pound euro. We see a very similar picture with the pound again powering into higher territory. So I have to see whether that move can be sustained into the new year. I mean, the pattern's still negative here. We've got this decline to there, big decline, then A, B, C. That was obviously corrective now, and this has yet to actually really motor above 120, which is a key level, but I mean, it is showing signs of trying to do so, so that obviously needs to be monitored. Okay, that's all for this weekend. If you found it interesting and useful, we're back with a report on Tuesday morning. Have a great weekend. I hope the sun's shining on you down in the UK. Thanks again, and bye for now.